Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, national underwriter for Old Capital, and typically joining me today would be Michael Becker. But again, he's on some due diligence assignments, so we wish Michael the best. He's closing, I think, 4 transactions right now, so he's up to his elbows in alligators, as they say. So joining us today is Jonathan Farrell. Hello, Jonathan.
Hey, Paul.
How are you?
I'm good. Thanks for having me.
So just to bring you up to date, we appreciate everybody getting their tickets for the Old Capital Multifamily Conference on September the 13th. September 13th. Again, that's at AT&T Stadium. That is the premier conference for multifamily B and C quality properties throughout the United States. Conference is, we're getting, I wouldn't say short on tickets because we could actually have 105,000 people at the conference, but we're trying to keep it around 700 people. So if there's any way you can jump on a Southwest jet or come on American Airlines, come on down to Dallas, we'd love to see you and rub elbows with some of the folks, including our keynote speaker, Roger Staubach. So we appreciate Roger coming in and sharing his story about what's going on. And remember, if you do like the content on the Old Capital Podcast, go back into iTunes or Stitcher and rate us as a 5-star. We do appreciate that. And then go on to the Old Capital Podcast website to get those tickets for the September 13th event. And then download the 17-page white paper report on multifamily financing. I think you'd find a lot of great information on it. It was a paper that Jonathan helped write, Michael Becker helped produce, and gives you some great insight about what's going on in the multifamily, how to get a loan, and what's important in lending, especially if the lender is bringing 75-80% of the money to the table. So you got to kind of know what the rules are in getting yourself a loan on a multifamily property. So today in the podcast, we're not going to talk about multifamily. Jonathan, we're not.
What? That's crazy.
So we're going to talk about something that's, as Monty Python would say, something completely different. But it's completely different, but it's in the kind of the same realm of multifamily because it's investment real estate. And there's multiple food groups out there. There is retail, there is land, say, development, there is warehouse, there is multifamily, and then there's industrial. And so today we're going to talk a little bit about some of the different groups. Our guest in the podcast today is Tim Wheeler. Tim Wheeler is with Transwestern here in Dallas. He is a top producer. In fact, he is the top producer in the Dallas-Fort Worth marketplace, and we're glad to know Tim. So, Tim, thanks for coming in. We appreciate that.
Thank you for having me, Paul.
So I'm going to kick it over to Jonathan, and let's get it going.
Yeah, Tim, thanks for being here. So just quick background on Tim and I. We've known each other for several years now. Both of us are board members on a North Texas CCIM chapter that's basically a group of real estate professionals. And so we've served on that board together.
What does CCIM mean?
Yeah, CCIM is Certified Commercial Investment Member. How many global members do we have, Tim? I mean,
it's a lot. We have one of the largest chapters in the United States here in North Texas. It's some of the best education out there for investment real estate. And top-level brokers are parts of our organization. And it's an easy website to go to and find the high-level folks in your market.
So you just pay a fee to get that certification?
Not so simple. It's it's kind of the Navy SEALs of commercial real estate, I would say.
I would agree with that.
Yeah, you got to go back to school and study for almost years on commercial real estate and understand how the formulas work and investment properties, do a lot of case studies. I mean, it is like almost going for a CPA designation. There is a lot of work that goes along with it.
Yeah, that's pretty accurate. I mean, if you ever run into somebody that has a CCIM designation, you can pretty much bank that they know what they're talking about. So listen to them.
So we have dual CCIM people in the room. Okay, so go ahead.
Yeah, so again, Tim and I have known each other for several years that way. So kind of quick background on Tim. You know, again, he's obviously an industrial expert, specializes in real estate consulting for national and local clients for the acquisition and disposition, investment sales, agency leasing, and tenant rep for Transwestern. He's been doing it since 1995. Been in the real estate business since 1995. Started off as an owner partner of a real estate firm focusing on commercial real estate investments. There, he was responsible also for the acquisition and disposition and management of privately held commercial investment properties. Tim's focuses on his clients' requirements to understand their goals and fulfill their needs in market-driven timelines to assure efficient and professional handling of their transactions. Recent leasing and ownership clients include Prologis, a local partner to the Global Trade TM, and Colony Capital. Did I miss anything, Tim?
Nope, that's it.
What you failed to mention is that Tim's the proud father of not 6, not 7, not 8,
Keep going.
not 9, not 10, but 11 children.
Yeah, we were joking earlier that we've said before that Michael Becker has so many units that he could be the mayor of Beckerville. And I was joking that Tim's family could populate the full township of
We could definitely make an
Beckerville,
impact and affect the vacancy rate.
Yeah. So anyway, Tim, let's just kind of jump into this. Maybe tell us how you got started as a listing broker, and certainly with Transwestern.
Well, with Transwestern, I was looking for a company that could, help assist my clients at a very high level with customer support, and we had all that there. I love the mission statement. I love the environment. I love the services provided to help me give best-in-class service to my clients.
Fantastic. And so you found that obviously in Transwestern. Is there something that Transwestern offers the market than other listing brokers do? So obviously there's a lot of brokerage firms out there. Why specifically Transwestern?
Well, we're one of the largest privately owned firms in the United States. We have a affiliation with BNP Paribas internationally. Customer service is at the top of our list, and serving clients well, and that's exactly what I was looking for. And they give us the freedom, the entrepreneurship. Our company helps a lot of folks at various levels of their ownership, investment, acquisition, disposition, all the way up to the State Farm sale leasebacks we were partners with here in Dallas and then in Arizona.
So the one thing I do want to make sure that everybody understands is what type of an agent, a real estate person that Tim is. So Tim is in industrial. He is an industrial / warehouse industrial leasing agent. He's a sales agent. He's the guy that, let's get into a little bit about what actually is an industrial rep. What do you do?
So what I specialize in, I focus on the Stemmons Corridor. Being a principal myself, owning a few warehouses, that gives me a perspective that I really have an affinity for my clients and understanding of their perspective from an ownership standpoint. Stemmons Corridor is a little bit of history on industrial. 2 oldest planned industrial subdivisions in the United States are there, in Trinity Design District and in Brook Hollow, 1 and 2, according to the Urban Land Institute. So all through the Stemmons Corridor, we get to see a significant variation all the way up to representing Prologis, the largest landlord in the world, and seeing their new, nicer product, some of these old dysfunctional buildings that had pickup truck dock doors. So you really get to see the variance of along the spectrum of industrial real estate.
If I've never seen or maybe I've been through an industrial area, tell me a little bit about what the characteristics are of an industrial area, an industrial building.
So basically, it's we joke about it. Hey, you got a building, you got 4 walls, maybe a small office in there, and people distribute, they manufacture, and there's different types of distribution centers, all the way from the great big Amazon monster boxes to the little mom and pop shops that are a couple thousand feet, and we have everything in between.
Great. So that's a great overview of industrial property. Maybe kind of getting into a quick breakdown of the types of industrial properties, not only kind of just square footage, but then also maybe asset classes.
Sure. And I'll break that down from how a lot of brokers and investors view it. You have the monsters, the 150,000 square feet plus, and you have certain brokers that focus on just that. That's kind of their bailiwick, and you have certain kind of ownership that focuses on just that. Then you have your 50 to 150,000 square foot spaces. And again, you have certain group of brokers that focus on just that as well. The wheelhouse that I focus in is your 15 to 50,000 square foot warehouses. That's where the majority of your real estate brokers are leasing and listing properties. Then you have your 5 to 15, and you have your under 5,000 feet. With under 5,000 feet, especially from an ownership standpoint, you're going to be looking at doing a little bit different marketing, a lot more direct deals. You're not going to see a lot of the tenants that come there. They're not going to be repped. They're going to be approaching the owner directly, and a little bit different animal under 5,000 feet. Starts to pick up a little bit at 5 to 15. We call those incubator spaces. You got people starting in business, a lot of them, starting in business and growing their business and getting their feet in the water. They're looking for shorter term leases, but the market's demanding much longer right now. So a little bit different there. 15 to 50, you're getting more established companies. So that's a little bit as an introduction to that. And then among those, According to BOMA, you have three different classes of buildings. The Class A, that's your most prestigious buildings competing for, your premier users with rents above average for the area. The buildings have high quality, standard finishes, state-of-the-art systems, exceptional accessibility, and a definite market presence. Those are kind of your highlighted buildings, if you would. The Class B buildings, those are your buildings they compete for a wider range of users with your rents in the average range for your area. Building finishes on the Class B buildings are fair to good. Building finishes are fair to good for the area and the systems are adequate, but the building does not compete with the Class A at the same price. In your Class C, that's buildings competing for tenants requiring functional space at rents, many times at the lower end of the spectrum, but not always. With market demand and supply right now, like we're seeing here in Dallas, some of these smaller buildings are getting significantly higher rents just because market constraint and choke points around the Metroplex.
You mentioned rents, and that's an interesting concept for industrial. So it's, first of all, is it a gross rent or is it a net lease? What's kind of the typical rent structure and also kind of term of the lease? Is it a year? Is it 5 years? Is it 10 years?
Great question, Jonathan. Again, back to some of your incubator spaces, they're looking to get their feet in the water. They're looking, many of them, for as little term as possible. But as I mentioned earlier, the market is demanding longer terms, and you're seeing that. And folks are, sometimes they're humping and grumping, but they got nowhere else to go, and that's where they have to plug in. And of course, that's what the landlord wants. The landlord wants somebody that's going to be there a long time, and they're a good tenant, takes care of the building, and you see that with people that have to run their business there to take good care of the building, because many times it's where they have their meetings, it's where they make their products, where they sell their product. They want their employees to be comfortable, and so they take good care of your building.
Yeah, so kind of moving on and kind of understanding our listeners and where they're coming from. A lot of our listeners are very interested and are either active or currently looking at multifamily, but wanted to introduce you as kind of an alternative to not just multifamily, but something else to consider. What are some of the benefits of investing in industrial? Because again, the reason our listeners like multifamily is the stability, it's housing, they understand it. Pretty much everyone can understand the concept of housing. There's rent, there's expenses. It just makes sense. So if someone's interested in kind of dipping into the industrial side, maybe you can go over some of the, again, the benefits of investing in that product.
Absolutely. And as you know, my background as a former police officer, started investing in multifamily. That's where I got started, and I can go through in depth the reasons I chose industrial. So I had some good friends of mine that owned and invested in industrial. They did a lot of it at a significant level. One of them in Orlando, he partners with a lot of doctors and dentists and attorneys, and they own these long-term leases. He looks over everything. He partners with them, and he just makes sure they just want to invest their money in good, stable assets. Are going to pay them for the next 15, 20 years. You get a tenant in there you kind of forget about, like, the CVS and the Walgreens, things along those lines. Then another friend of mine who invested, he said, listen, Tim, you want to lease with the big box and the larger landlords. Those are the listings that you want. But when you want to own some of the smaller stuff, so you're not competing with your clients. And I found that's been a very good track for me in business. And, the smaller stuff, there's not a lot of competition, especially from the institutional owners on that. So what you have is different management, whereas you expect turnover significantly with multifamily. You expect it yearly. If it's more than that, that's great. But you don't expect that with industrial. Some of your smaller spaces, maybe you do have some little shops that turn that, but we see very few of that here in the Metroplex market. Usually they're 3 to 5 year leases, especially on the smaller ones. On some of the bigger ones, we see 3, 5 to 7, all the way up to the really big ones. They want to lock it in 7 to 10, then they just negotiate because they get such a good rate over long term. If they ever need to move out, the tenant, the user, is counting on that space being locked in rent so they can sublease it. So
that's perfect overview of kind of the leasing structure. Back to the rents. Are they typically a gross rent? And by gross, I mean, obviously the tenant pays a set number and then the landlord is responsible for all the expenses after that, or is there some variation of that?
Great question, Jonathan. We're seeing both and. So your gross rents encompasses everything. That's where the tenant pays one amount, and then the landlord, they pay the taxes and insurance, and it's all included in that amount. Net rents. Many landlords prefer net rents because they're just collecting their base rent. And then the tenant, it's not included in the rent. They pay a separate for taxes, insurance, maintenance, and many times management in some of your larger products if you have management that manages your property for you. So net lease, you're looking at just the rent you connect, and then the operating expenses are separate. Gross lease, everything's all inclusive. On some of your smaller ones, under 5,000 feet, it's easier just to quote a gross rent. Interesting thing, representing Prologis, again, the largest landlord in the world, they're converting over to what they call clear lease, which is a gross lease with a net of taxes. Because what they found, they have a good focus group with their top clients around the world, because they have some clients that rent a lot of space from them. And they said, what do you want? And clients want fixed cost over time. And they have such a good wired system that they can estimate what it's going to be over a certain period of years and factor that into the rate. And what that allows the user to do, it gives them a fixed cost so they don't worry about the fluctuations in the market. They got their budget and they can go on about their business, which is what the user in the space wants to do.
Does multifamily have net leases in it?
No. No.
I like the fact that, obviously our listeners are hearing the fact it's like, again, net leases where you get to pass along a lot of the expenses to the tenant. You've got less intensive management because you're dealing with obviously less amount of tenants. You get longer leases that you get to fix and set them and kind of forget it, as you point out. So there's certainly some benefits to the industrial space, just knowing and understanding it and getting with a guy like you that can educate, obviously, the pockets to look at, what to stay away from, what's kind of the path of progress, or what are the trends that are kind of coming up in the industrial space. So that's great feedback. So those are all the good things. Tell us, what are some of the risks to industrial space?
Some of the risks to industrial space is, here right now we have things changing in the Dallas Metroplex. Several years ago, about 6 years ago, I had a broker at a large meeting say, if you put the Metroplex into a clock face with Alliance at 10 o'clock and Mesquite at 5, there's only 14 remaining locations where you can build a 400,000 square foot build-to-suit. So in Texas, we've always overbuilt in the past. And now that's creating more points where it's forcing demand in very aggressive cycles. You take with that gentrification is happening in warehouses. I'll give you a good example. Back to the oldest industrial subdivision in the United States, I bought a warehouse just a few years ago for $65 a foot, and we were paying a very good market price, but we knew the velocity was just going like gangbusters. And a little over a year later, we had people knock on our door offering $150 a foot to buy that same warehouse because they're within a mile of all the uptown high-end, $35+ a foot office space, and they can be less congested, and they can build out an office inside this warehouse in this cute gentrified old building. And the funny thing is, even though these buildings are old, maybe a little dysfunctional, maybe not the best access for your shipping and receiving, well, they are cute, they're quaint, and the construction is off the chart.
Talk a little bit about, the Stemmons Corridor. How big of an area is that? If somebody is not from the Dallas-Fort Worth area, is this a large area? Is it 2 blocks? Is it 60 miles? How big is the corridor?
No, so the Stemmons Corridor goes from downtown Dallas all the way up to the George Bush, which is just beyond between North Dallas and the Frisco area where the Star is. And that's where we happen to be broadcasting the podcast from.
It's a large area.
It's a large area. And the Stemmons Corridor, I used to call it the Capitalist Corridor or Entrepreneur Central.
Sure.
It's kind of the spine of Dallas, if you would.
Right. It's right in the middle of the city itself. Dallas is on one hand and Fort Worth is on your left hand, and you kind of bring the thumbs together. That's where DFW Airport is. So this is kind of like your large middle finger going through your right hand. It's kind of the backbone of the city of Dallas.
I agree.
So what is occupancy on industrial buildings these days, and let's say in that corridor?
It's crazy right now. We are down to significantly low. I can tell you that the market is saying we're at 4% and 5%. That's what some of the national data is telling us. But I can tell you in some of these small pockets, it's even less. We are turning some of these spaces. They're getting rented before they hit the market. There's a lot of that going on right now. If a space is sitting for any length of time in this Dallas submarket, there's usually a pretty compelling story about why it's sitting there.
These industrial buildings, I know a lot of manufacturing has been done overseas, or it's been done down in south of the border in Mexico. Again, focus in again, what do some of these tenants in these buildings, what do? Do they manufacture in these buildings? Do they office in these buildings? What do they do?
Both, and that's probably the greatest thing and what I love most about what I do. I can go into 10 different buildings and hear 10 different stories. 9 out of 10 of those folks ended up in a business they never thought they were going to be in and just loved what they were doing. You have your furniture manufacturers, you have your distributors, you have your fabricators, you have your folks doing automotive, you have your folks just doing shipping and receiving, you have your logistics companies. My goodness, what else? I mean, I could go on and on.
So
name a business.
So tell me how some of the, let's say, our listeners would invest in something like this. I mean, a lot of these transactions that we do on the multifamily side are done in syndications, where it's one group that kind of forms a bigger group, putting individual investors together to buy these units. Typically, out of 10 transactions you do, is it just one big landlord that buys these, or is there individuals that they buy the building and they also own the business inside the building? Tell me a little bit about how individuals can participate to buy these buildings.
Both and. So right now we're seeing so much so it's an impact on the institutional ownership, some of these private owners getting into the game. I was at a NAIOP, NAIOP, National Association of Industrial and Office Property Owners, breakfast, and one of the top brokers in the country, Capital Markets broker, was up there saying, he said, these private individuals have so much wealth they've accumulated, and the market's so great right now, they are a real force with buying institutional product. And then they have enough to leverage into a syndication. And next thing you know, they're competing with the larger REITs and buying portfolios. So it's both and.
So occupancy is great now, but what's behind door number 2? Is this very much conducive how the economy does, how the business does, and how the business pays the rent?
That's a great question. So I'm obviously biased towards Texas and specifically North Texas. And I'll tell you a couple of great things we have going for us. The new market constraint I told you about. So let's say the market does, crash more than 30% and nobody sees that coming.
Sure.
Nobody's saying anything like that's even close. As a matter of fact, all the top folks in the country are giving us a really significant favorable thumbs up. But let's say it does. People still need to do business. People still need to operate their companies, and they got to have somewhere to go. And there's less and less places to go, and now less and less land sites to put them. And people, you'll see that when you go to some of the outer areas and they're developing, you talk to the urban planners, economic development committees, they're not putting a lot of place set aside for industrial. So if you have an industrial piece, your grandchildren can probably collect rent and great-grandchildren off of that property if they so desire.
It is really amazing the amount of stuff that's actually coming up in Dallas County or right in the slash of Tarrant County at DFW Airport. And talk a little bit about what's going on over there.
Wow. So the airport, for your listeners that do not know, we probably have one of the only land sites in the world that could compete with a Hong Kong or a Dubai. And that's by design. Dallas and Fort Worth did that just remarkably well, and they did everything right. So the airport owns several land sites. Our airport's a huge land site with several industrial parks and some office surrounding it on these long 99-year land leases. And there's a lot of very sophisticated, savvy investors investing in that product because it's just a phenomenal location. Even Centerport just to the south of it. And so we have room to grow as it needs be, and they can take space back as they need be, but it's just a phenomenal location. And now with there's so much going on with technology, this new Uber Lyft that I understand Mr. Perot Jr. is investing in, and the high-speed rail. And the high-speed rail, folks are even discussing now high-speed rail to satellites, like maybe to a Weatherford, a Midlothian, a Waxahachie. And I mean, can you imagine high-speed rail from McKinney to the airport? You park at a satellite up there in the outer perimeter and just zip right in. That'd be a game changer. So doing a lot right at DFW Airport.
Jonathan, I'm going to pick your brain a little bit on financing these type of transactions. Tell me a little bit about industrial warehouse. What type of leverage and rates and things like that? What are some of the key components?
It's going to be a lot of the same components as far as structure is concerned on multifamily. So the leverage is going to be a little bit lower. So bank financing on multifamily is going to kind of top out around 75, 80 at the most with recourse. Industrial is going to be probably 5 to 10% less than that. So you're going to be somewhere in the 65 to 70% range. And again, the component to the underwriting of industrial that's different than, I'd say the major component that's different than multifamily is you've got to do a strong look at the tenant. You're not just underwriting the property itself as far as occupancy and rental rates, demand drivers in the area. You're looking at the viability of the company to pay the rent. That's the major difference between that and multifamily, where you've got, 100-unit property, you've got 100 different tenants. And if one leaves, no problem. You can backfill that with another one. Whereas industrial, a lot of them, Tim will echo this probably, is that they're either single tenant or dual tenant, unless you're buying it in a portfolio setting.
Right.
And that's the concern. Your occupancy is either 100 or it's 0 or it's 50, and loss of a tenant can be a major blow to the income.
So does Fannie Mae finance industrial buildings?
They do not.
So who would typically be the lender in a transaction like this? Is it just a large national bank? Is it an insurance company? Is it? Tell me how these deals get financed.
Yeah, so the comparison to agency debt would probably be going to be either your CMBS type debt, same types of underwriting, that type of thing. But banks do probably the biggest piece of the financing for it.
If you're looking for on an industrial property, you would probably do a CMBS or an insurance company transaction. That's what we do. The CMBS is the commercial mortgage-backed security piece, and they're probably going to get anywhere from maybe 65 to 70% leverage in that range, and they're going to tie it up for maybe 10 years with a term with up to a 30-year amortization. So you would have a defeasance penalty if you try to get out of it anytime earlier than 10 years. The loans are assumable, but that's a way that a lot of these large industrial buildings get financed, but it's going to be, just like Jonathan said, lower leverage.
And the leverage is directly tied to the credit rating of the tenant too.
So talk a little bit about that. I mean, what happens if it's a mom and pop that does not have a credit rating, and do we get to see the financial statements from the tenant?
Yeah, so absolutely you do. But as far as the quality of those financials, again, to Tim's point, a lot of these are kind of startups, that are growing, that type of thing, versus a national company that's been around for 50, 100 years. That's going to affect a lender's mindset on how much leverage they're going to put against that property.
Yeah, I would probably use the analogy that, and this is not an industrial property, but it's a retail, like a Walgreens, which is a credit tenant lease, versus, Bill's Pizza. And Bill may not have financial statements, and if he did, it was in a shoebox that done with a pencil. So that's the big difference. In apartments, we don't underwrite the tenants. We just underwrite the cash flow on the building. Now, we underwrite industrial with the cash flow, but we want to research a little bit about the viability of that business and the viability of the future cash flow on the property. So what else do we need to know, Tim, on industrial buildings that you think somebody that is sitting on a couple $100,000, is that type of an investment that people make in? Or give me kind of a right down the fairway what somebody should be looking at. Is it a $3, $4, $10 million building? Where does the economies of scale come in that actually you could make some money in industrial warehouse?
Honestly, that's the good thing about industrial, and thank you all for the type of leverage you have in place. Once folks put down 30%, how many times do you see a market crash more than 30%? So they're in there, they're pretty stable, and they're able to withstand the storm if a storm comes. That's another good thing about industrial. And as I said before, people need to have a space to operate. And with our constraints on the market on infill right now, my goodness, they're repurposing these buildings. It's just amazing to see with these beautiful warehouses getting renovated. Now you have some nice high-end architecture or law firms in there now. So I think because of the leverage, I think that's why I'm there, and that's where I put my money. I like industrial.
So to that point, someone's ready to kind of dip their toes into industrial, and we'll give your information out at the end here of how to get in touch with you. But I mean, what are some things that buyers can do on an initial phone call or email reaching out to you to kind of set themselves apart, get your attention, or what are the first things you're looking for in a buyer, potential buyer? To
know and to help them to know clearly what their goals are and their outcomes. Do they want a truly hands-off coupon clipper? Do they want a higher return? Because there's a give and take there. And, there's some buildings you can spend a little bit more, get a great quality building, and you can have some good. I can take you and show you these little 5,000 to 15,000 foot buildings with national credit tenants in there that folks have been clipping coupons on since their husband, who's now passed away, had the business years ago. And now mama's grandma and she's off the husband's business, still clipping coupons. I can introduce you to probably 7 building owners that own 5 to 20 buildings that started out as just owning their own building. And then when they transitioned, they collected the rent. And so It's a pretty good stable one over time. So the first question I'd ask them is, what are your goals? How much capital do you have to invest? What kind of return are you looking to get? And then we partner with you and have the discussion on how to leverage that to get the return they're looking for and what's the best option. And I'll pull things from different parts of the market and say, here's what you want to look at for this. Here's what you look at for that.
So one of the things that I've always found on the industrial side, you do have to have some money to go into these transactions, but it is typically, let's say, one tenant or three tenants or five tenants. It's not 120 tenants on the property. And a lot of them are credit tenant people on the deal. So, we run into a lot of people that, whether it's Home Depot or Lowe's or Walgreens, they have one space, one building. And if that company goes out, it is what it is. But those credit tenants usually pay a lower coupon, lower overall cap rate back to the investors, and industrial pays a little bit more. So like what you originally said is that you got into multifamily first, and then you transitioned into industrial. That's what I think a lot of people see these days is that the multifamily space is a very crowded space. It is sometimes an inflated space. There's a lot of money chasing deals out there, transactions out there, that they should probably be looking at other property types in investing. So if you do have an exchange, you're selling a multifamily property, this is maybe one of the ways you may want to transition, or I wouldn't say graduate, but maybe transition from multifamily into industrial. The market right now is, I would say, would you say on fire on the industrial side, Jonathan?
It's pretty hot.
Tim, would you say the industrial market is pretty hot these days?
I would say it's smoking.
So, but if you're looking for opportunities, I mean, that is, just want to throw that out there. If you have exchange money, if you're thinking about taking X amount of dollars and putting it into an industrial building that has maybe one tenant or two tenants or four tenants, and typically the rents in those tenants usually come in 3 or 4 days early than when they're actually due by ACH. And then you can have a group like Tim's company that actually manages the property too for you, or can do for you. I mean, these are opportunities for you to take advantage of in the multifamily, transitioning into industrial. That's something is. Anything else, Jonathan, we should add to that?
No, I think that's a great recap. Tim, thanks so much for coming in. If some of our listeners do want to reach out and just get to know a little bit more about what you do and maybe just have some questions that we didn't cover, I mean, what would be the best way for them to get in touch with you?
Email me at my office. It's Timothy, Timothy, .Wheeler, that's V like Valentine, ELER, at transwestern.com. Timothy.Wheeler at transwestern.com.
We covered a lot of information today, Tim. We haven't gotten everything out. Is there one thing that you'd want to have listeners know? What would help them understand what industrial is all about? Is there one thing that you can just give us a little inside information, what people should know?
Cost to turn a building. When you asked when I transitioned, one of the factors, when I saw the cost to turn a space, you have one building bringing you all this rent compared to how many apartments. Yep. You have 4 walls and a roof, and the tenants are taking care of everything inside. You have a good tenant, you have great quality, that the condition they leave it in. And if not, the turnover, most of it's warehouse. There's very little to turn over. Paint, carpet, and I see warehouses that have office from the 50s, and you turn around, paint and carpet, put some LED lighting in there, and it's simple and many times inexpensive. So, that's something I'd point out significantly.
So some great information from Tim Wheeler from Transwestern here in Dallas. If you want to get a hold of Tim, take a look on the Old Capital Podcast website. We'll have Tim's contact information on there too. So, Tim, thanks for being in the podcast.
Pleasure.
We appreciate that. Jonathan, always a pleasure.
Thanks, Paul, for having me.
I'm Paul Peoples. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.